Hello, ladies and gentlemen, Jay Tyler here. Welcome back to Jack Fund Management. AMC has gone a bit wild. It still looks like an amazing stock, though. Then again, self proclaimed apes ran it up. It seems a bit unusual. People may think of economics somewhat politically. Investors would do well to keep in mind long run, markets operate as a weighing machine. Mudrick had a funny history. They dumped on retail traders. They did not invent this playbook by any means. They followed in lockstep with Silver Lake, which scooped up and basically seconds later converted and profited, this time on senior notes. Mudrick, too, owned some debt and reportedly sold out of it. AMC CEO Aram went on YouTube, Trey's Trades, to try to milk people a bit more. Filing a prospectus, AMC asked, more like recommended, shareholders to approve/vote for extra issuance. Once more, looking like Groundhog Day of millions and millions of additional shares. Due to current company bylaws, they can't even issue any. And even if they could, this cannot happen until 2022. Bylaws dictate they have about a 525 million maximum limit, and they pretty much hit that. They apparently try to imitate US government enterprise with probably a slightly less effective business model. They have gotten saddled with a boatload of debt. One could call AMC a poster child for double-digit rates. No bank will lend to AMC now, sans a far above double-digit interest rate. AMC ran out of common shares to even offer, and has heaps of non-convertible debt. Of course, you have people talking of writing checks they cannot cash. With the new IR site, loyalty programs, we heard about some 13-year-old who spent that hard-earned cash on AMC common stock. People could read about how currency really could have primacy, not these shares. This speaks volumes for this business model. AMC will hold an annual shareholder meeting later this month. In a grounded mentality, barring some world transformative technology using traditional methodologies, admission revenues for 2020-2023 within AMC likely look to land about 4% down from here. Cinemark, ticker CNK, actually has a healthy upside. AMC now has a higher market cap than Caesars Entertainment, HubSpot, Clorox, Etsy, DraftKings, and Nissan. AMC tried to heavily caveat on 8K filings while they preach on press releases. They still may not have blanket immunity. To bring politics, rebelliousness, let alone emotionality to markets makes us think of a quote. What starts as a revolution ends in tears. SEC officials warned Tesla more about manipulative messages. Plainly, Tesla has preoccupation with recalls and raising prices on cars due to inflation and bottlenecks. Of course, they do not have a PR team, so governance, board issues, nepotism may abound. Wage pressures remain a front-facing story. A key story of wage inflation appears around a bend. Under this umbrella, Amazon will no longer test employees for marijuana. Employees keep trying to desperately get so-called creative. Higher opening bids, signing offers. Nasdaq broke above a consequential level, 13.8. We turn to a more material market driver, weighting and flows. Overweight on Apple, Tesla could crush performance. Likewise, underweighting energy. OPEC has kept supply pretty tight. Saudi Arabia largely runs this show. Oil ascends. Video conferencing may grow with more collaborative workflow features. Some may not even go back to work if they cannot work from home. And hybrid models retain hold over US economic way of life. This modus appears ongoing globally. Summers historically offer a best 3-month spread for investors for a first year of a president. States have and will remove extra unemployment insurance. Prices paid has gone higher. ISM PMI keeps proving that getting general inputs in any prompt manner remains a big challenge. Barges sit outside ports due to no shoremen to assist. All in all, this presages an optimal scenario, a stomping economy coming out from where we came. A small yet temporary increase in job search activity came from states opting out of unemployment benefits. Pools of people could use work. Employers have offered much more money. Many may think of unemployment they have as temporary, a furlough. While a bulk of this figure did get merely furloughed, this misconception appears like precisely that. Many do seem reluctant to work. Time off could have given people time to feel less urgency about work. After lockups, people may want to do other things that they could not do for 15 months besides work. People could desire to see family, which could foster more rise in airlines, like ticker AALLUV. Some claim this as a looser labor market. Evidence points to, largely due to unusual targeting of this pandemic, a tighter market. adding more testimony to this upward pressure on wage thesis. Drilling in Arctic refuges has gotten halted. Biden will suspend any more leases, locking up almost 11 billion barrels of oil in the zone, further tightening the supply, along other relative consequences. Another cyber attack occurred. Biden should probably wake up. Sustainability starts to factor increasingly in consumer choices. One has marketed sustainability, consumer perspectives of sustainability, and actual sustainability. Very often, as with most things, as usual, some who portray themselves as such fall short. Those who actually practice sustainability often do well. This has correlation with best management teams, thoughtfulness, foresight to stay ahead of curves. Zoom did quite well, making a case that some perceived as stay-at-home names could have durability. A Quiet Place 2 came out, bringing in $50 million in admission revenue domestically. Blank check financial wrappers, S.P.A.C, about half of them trade under an initial price. Many use or abuse S.P.A.Cs as a way to liquidity, whereby they cannot otherwise pass scrutiny. Bed Bath & Beyond, ticker BBY, has displayed positively quarter over quarter. Bed Bath has a lot of balance sheet cash. They gear up to supply dorm goers and first semester demand. They aim to deliver almost $900 million in EBITDA over a 3-year period. Outdoor grilling, summer/home enjoyment, and style support BBY. They will freshen and brighten up stores with remodeling. SEC officials caution Tesla and Musk. Since crypto day trader Musk badmouthed Bitcoin, a tool he used just recently to flip some fast cash, and also to pad this Tesla balance sheet, sentiment statistics around Musk have emphatically dropped. Treasury yields have remained solidly benign for now. Energy stocks with Schlumberger offer a radically positive outlook. GOP senators offered a more moderate fee on infrastructure spending. Biden scampered, pulling back puff talks of raising corporate taxes. Conservatives said they would like to use unused pandemic funding to help spending. Many Democrats decried they would rather use taxes. Many posit we have overstimulus, definitely in terms of labor market and inflation. Centered too much on short-term thinking, it could prove better to spend on long-term U.S. GDP growth. U.S. came out with a middle-of-the-range, most recent jobs number. In this, labor force participation rate still looked way low. Workers proved not there to fill almost 9 million open jobs. States will pull out of unemployment welfare to incentivize people to get back to work in normalized labor markets. U.S. Fed will scale back bond asset purchases. Firms have cybersecurity risk, period. Biden has to man up and have a blunt talk. More critically, cybersecurity firms will avail from this. U.S. has to help provide better defense, bring industries together. An argument arises, U.S. does not pay terrorists by principle. Some of these private enterprises got in a bind. No shutting internet or walling off internet work. America has benefited obviously from this. Markets have majorly priced in this recovery. They look for new drivers, fiscal policy, and for financials like ticker WFC, steeper yield curves herald even more good things to come. Smaller caps can do well in these kinds of periods with energy. Nvidia said they will capture ARM. Tesla has dropped market share in China. They had a global monthly market share sinking to 11% from 29%, while all traditional manufacturers have gained decisive and very sizable market share. Volkswagen and Ford, ticker F, particularly developing, enlarging, and mightily earning from this. Banking ETFs have seen momentous inflows. XLF, for instance, accelerating growth pace ETFs, some based on algos, in rebalancing, shifted heavy weighting to financials, adding names like Bank of America, ticker BAC, and JP Morgan, ticker JPM, as we expounded on over and over, replacing Apple and Microsoft. VIX elevation can tie into meme names. Vol complexes really fascinate us. 18% of Americans telework. Apple spent billions of dollars on a campus, one of many reasons why they try to force workers back. Trends still show more permittence for at-home work. If one feels unwell, requested not to rush back to work. Yet politics may come into play, as some CEOs like WeWork, ticker WORK, caught themselves saying workers could benefit by coming in, certifying more, quote, commitment, unquote. The king of S.P.A.C, Chamath, will come back. Buckle up. He got called out on gross free warrants on SPACs, another extravagantly miscomprehended aspect of SPAC investing, coming under extreme fire. Very, very reasonably so. Chamath, as all good slitherers do, went from ashes to ashes. This only shows why people, true investors, could see great use in actually reading into plumbing and vehicle structuring. We feel inclined to quote Marcus Aurelius, even in an economic setting. Make for yourself a definition or description of the thing which is presented to you, so as to see distinctly what kind of thing it is, in its substance, in its nudity, in its complete entirety, and tell yourself its proper name, and the names of the things of which it has been compounded, and into which it will be resolved. For nothing is so productive of elevation of mind as to be able to examine methodically and truly every object that is presented to you in life, and always look at things as so to see at the same time what kind of universe this is, and what kind of use everything performs in it, and what value everything has with reference to the whole. Fads typically turn into manias. S.P.A.Cs just simply denote a financial wrapper, not an asset class, so on and so forth. Schools started to reopen in earnest. Jobs reports pointed to tightness, smaller than estimated gain in non-farm payrolls, while larger than estimated gain in AHE. Yet honestly, this looked like, as they say, a Goldilocks report, not too hot, not too cold. Some may play this report of tremendous hiring in amusement parks with ticker SIX, Six Flags, and ticker SEAS, SeaWorld. With leisure growth, airlines, ticker AAL, LUV. Bond yields lowered on this news for now. Gold spiked and has spiked for a while. Nasdaq naturally saw biggest bang. Higher wages may also allude to a fact that people have gotten brought back to higher paying careers. This could indicate a more gradual opening, not a blisteringly hot opening. Biden, critical words, tried to assure. We actually look ahead to 2022 to inflationary pressures. This report shows an inadequacy in number of people to fill jobs. Elimination of idle benefits can spur solutions to this. Factors that inhibit growth will disappear within a couple of months, opening up floodgates. Only about 60% of labor actually work now. Schools starting to open this autumn could help some of those with kids get back to work. People going back to work could help as a multiplier on economic activity. As people commute, they could spend more, contributing to overall American economy. A not so secret surfaced that productivity growth actually picked up in this pandemic. Do not anticipate a once promised 100 million per month job gains with that earlier jobs report. Anxiousness emerged, as on that number, it could take 4-5 years of job growth to get back to pre-pandemic levels. With this report, obviously, that timeline gets cut in half. Maybe, most meaningfully, broadcasting this recovery proceeds. Vol has dropped a bit, leading to a slightly sideways market. Other than cruises getting back to life, stocks, airlines, theme parks, some meme stocks, smaller floats. While banks could keep doing well on this upcoming rate regime. Tips markets, consumer confidence numbers mean more. Leading indicators. Credit markets can tell us things 5 years out. More CEOs should go on proper channels like this. Jeff Immelt could have come on channels of people to describe a turnaround. Now GE does it without him. Ford Motor Company, ticker F, has jumped to 80% year to date. Tesla has severely underperformed year to date, down 15%. DocuSign followed Zoom in a persistent trend. DocuSign still demonstrates immense utility clearly, with dazzling NDR, net dollar retention, crushing billings. DocuSign zoomed up circa 25% on a single day on this data. Elon tweeted about Bitcoin once more, trying to push it around. People deep in it call him a tourist that may do things more for views, clicks, and to collect followers. Banks, central banks, did not give you value for money. They tell you deserve zero for money. Something like Algorand offers at least 6%. Thank you, Jack community. Thanks for coming back to join us on our educational, honest journey as we work in part to bring you latest news, sobriety, and integrity in finance. Stay tuned, join us, join Jack here next time.